We save so that our tomorrow can be like our today, right? You've saved so that your lifestyle doesn't have to change just because you leave the workforce and you move into retirement. So if you're that type of person who wants your tomorrow to look like your today, you probably have enough money in your 401ks, IRAs, etc., so that the withdrawals that you take in combination with Social Security will make it such that you can maintain the same budget that you're accustomed to. But now here's the rub. Whether your money's coming from a paycheck or it's coming from a combination of, say, Social Security and IRA withdrawals, your income tax level is going to be at least 100% the same. And now we have to consider what happens if taxes go up in this country. You might actually find yourself paying more in taxes as you age. What's going on? We're back with another episode of Saturday State of Mind. Today, Jess, talking about, I think, everybody's favorite topic, which is paying taxes.
Yes! Yes! Oh my gosh, I'm so excited.
Our government needs money for a variety of things.
Would it be the trillions of debt?
Well, you know, we need roads, we need a military, we got to educate the youth of this country, right?
Sure.
And of course, they spend every dollar ever so judiciously, efficiently. Nothing goes to waste,
Yeah,
right?
it's the Department of Education.
Yeah, so we've got to pay our fair share. But I often like to remark that to a certain extent, paying taxes in retirement is voluntary.
That is something you say that's salacious, I think.
Most people disagree with that statement as soon as it leaves my lips. So I usually have to repeat it until it sinks in. To a certain extent, paying taxes in this country is voluntary. And the best way to kind of illustrate that is that if we, like, just say you and I are going to do our taxes, we're separate people, right? We're going to do our own thing. Let's say that I'm getting fully educated on all the credits, all the deductions, all the loopholes, all the strategies, all the things that I can do to best protect my money, while you over there just log on to TurboTax once a year. You don't pay attention. You just file what's owed. What are the odds, even if we're making the same kind of money, if we have the same amount saved, that we're going to pay the same amount in taxes?
Very, very little.
Because I'm doing the work.
Sure.
And I'm finding the opportunities, and you're just hoping that they drop out of the clouds onto your head, right?
I kind of even think if you take your taxes into work with a tax professional and you take it to 3 different offices, you're probably going to get 3 different numbers. And that's because the tax code is so stinking large, right?
Yeah.
And there's so many different things you can do with taxes. So you got to make sure you're also working with a firm that you trust.
And I would say, too, people have to recognize that there is a huge difference between tax preparation and tax planning.
For sure.
So the exercise every April 15th, whether it's TurboTax, H&R Block, a local CPA, even if you're doing it on your own, you get the 1040 on the kitchen table. That is tax preparation. That's looking at the year that just passed, looking at all of your taxable activity, doing some bean counting, and putting all your beans in the appropriate boxes. And you either owe or you get something back. There's a couple last-minute maneuvers you might be able to pull, but those are kind of narrow in scope. The year is already over. So it's effectively an accounting exercise where you're just reporting on history.
Sure.
That's tax preparation. Tax planning is looking forward. And today I want to talk specifically about how taxes sneak up on us in retirement. Jess, I think a lot of people assume when I retire, I'm going to be in a lower tax bracket. Therefore, I'm going to pay less in taxes. And that ain't always the case.
Yeah, because they think their paycheck's not coming in anymore. My income isn't as high as it was when I was working. Thus, I'll be in a lower tax bracket.
Sure. And by the way, that is true for a large majority of Americans, particularly those that haven't saved particularly well for their future. If you retire and you're reliant on Social Security, which covers about 1/3 of your paycheck, then yes, you're going to have a drastic reduction in income. You're going to probably go into a lower tax bracket. And as a result, you'll pay fewer taxes.
Sure. And Social Security is taxable. And I feel like a lot of people don't understand that too.
And we're going to touch on that. But suppose you've been silly enough to save money.
How silly.
You know, people do that. They have 401ks, IRAs. We save so that our tomorrow can be like our today, right? You've saved so that your lifestyle doesn't have to change just because you leave the workforce and you move into retirement. So if you're that type of person who wants your tomorrow to look like your today, you probably have enough money in your 401ks, IRAs, etc., so that the withdrawals that you take in combination with Social Security will make it such that you can maintain the same budget that you're accustomed to. But now here's the rub. Whether your money's coming from a paycheck or it's coming from a combination of, say, Social Security and IRA withdrawals, your income tax level is going to be at least 100% the same. And now we have to consider what happens if taxes go up in this country because of the debt that you just mentioned. You might actually find yourself paying more in taxes as you age.
Well, especially when we just had some tax cuts too. We know they're going up in the future, right? And people are paying more taxes later on once those tax cuts go away, should they? And I think too, the spending like gets people because they automatically think in retirement, I'm not going to spend as much. Like I don't have to buy clothes for work. I don't have to put gas in my car driving to the office. Guess what? You guys got a lot of free time on your hand and you want to enjoy life. So your spending might actually look pretty much the same.
Yeah, the dangerous thing about what's come out of Washington of late is with the one big beautiful bill, Trump's tax cuts were made, and we got to be really careful with this word, permanent. Okay?
Permanent.
So when I hear that word permanent, I think forever, because words have meaning. I did pretty well.
I believe that is a different definition of permanent.
Yeah, but the thing is, permanency is not really a thing in Washington. Any new version of Congress in the future can get together and unmake a permanent tax change. So with the amount of ballooning debt that we have in this country, we need to be on guard for the specter of higher taxes somewhere down the road. And we also have to consider how taxes change a little bit in retirement. You know, while working, you're generally only paying taxes on wages. There's probably some interest that you're earning on bank accounts and similar. And maybe when you buy and sell some stock or some real estate, there's some capital gains to contend with. So that for most people is their kind of tax experience coming up to retirement. But going into retirement, now there's other items that we have to start thinking about, like taxation on Social Security. You just said that, Jess. There's Medicare surcharges that we have to be wary of. There's the required minimum distribution.
RMDs, yeah.
And all of these operate under different rule sets and have different consequences at different points in time in your retirement journey.
Can we talk about RMDs for a second? Because this is one of the most devastating taxes or penalties if you don't take your required minimum distributions. And I really want to make sure everybody listening understands that.
Yeah, RMDs are kind of left unattended. They can serve as kind of a retirement tax bomb if you're not careful. So I'll illustrate through a hypothetical. Suppose that you have a modest budget. You can live on, I don't know, $80,000 a year, but lucky you, between you and a spouse, you're going to get 50 grand from Social Security. So all you need is to take $30,000 withdrawals from your nest egg to make ends meet. And suppose you have $1 million in your IRA. If we're investing that money and you're getting, say, like an 8% rate of return, that's 80 grand a year. You're only spending 30 of it. So now you have 50,000 that's getting reinvested. It's a lot of math here, people, but this is what we do, right?
I get lost. All those numbers.
So what's going to happen is that account is going to grow.
Right.
And now suppose you get to 73. That's where for most people right now, RMDs are starting. And your opening RMD is about 4% of the balance of those accounts. Let's say that your $1 million account is now worth $2 million. 4% on $2 million is $80,000.
Wow.
So you don't need that much, but it doesn't matter if you need it. The IRS tells you to take it.
It's required.
And in combination with your Social Security, you're now almost certainly at risk of rising into a higher tax bracket.
What if you say, you know what? Nay, government, I shall not take my required minimum distribution.
Yeah, there are really stiff penalties for not taking your RMDs. And then, by the way, if you ignore those penalties, at some point, a black van shows up in your driveway and you disappear. So you need to take your RMDs.
Yes. So there's all sorts of these surprises that can come as a way of taxation retirement if you're not prepared. So how do you get prepared? How do you know about it?
You just have to understand the lay of the land and understand what you're up against. So this is where I like to geek out a little bit. You know, growing up, my dad used to subject us to watching some of the movies he liked to watch when he was a kid. So a lot of Charlton Heston stuff. But we also watched some old monster flicks where it was either men in goofy suits or like some like really terrible by today's standards claymation type stuff. And there was one movie that I know that I really enjoyed watching with him called Jason and the Argonauts.
I was just going to say, you better not be coming after Jason and the Argonauts.
Well, in the penultimate scene, Jason fights a Hydra.
Oh.
You familiar with what a Hydra is,
That's
Jess?
all the heads. heads, right?
Yes, it's like this like sea dragon type of deal.
Yep.
It's got, I don't know how many heads. It's a lot, maybe 10,
7?
12.
Oh gosh, maybe.
7. And it depends on
There are so many.
the maturity of the Hydra, I suppose. And they're really tricky to kill. When you chop off one head of the Hydra, 2 more grow in its place.
No.
So Jason had his work cut out for him. And if you're wondering, where are we going with this? I often think of the US tax code as a bit of a Hydra, because there are different elements of the code that are all ready and willing to snack on you, but you sometimes don't see all the heads for what they are. So take as an example here, Jess, we just talked about the RMD, and people focus on that, and they prepare for it. How much do I have to take? How much tax am I going to pay? But let's just suppose that what I made mention of comes to pass, that you rise into a higher tax bracket. So you brace yourself, you grimace, and you say, man, I can't believe I have to pay higher taxes. And you're shaking your fist at that head of the Hydra, the ordinary income tax, and you're saying, you got me this time, Hydra. Next thing you know, there's another head that's taking a bite out of your flank, okay?
Can't catch a break.
RMD and the higher income that you're receiving is now likely to subject your Medicare to surcharge. A lot of people don't know that the higher that your income is, the more you pay for your Medicare.
Like, a lot of people don't know about Medicare surcharge, and that's scary because you could be paying quite a lot.
Now, by the way, so you see that other head of the Hydra and you're trying to fend that off, and then you get hit again from the flank, this time on the other side, because that same income that's now subjecting, say, your Medicare to surcharge could also be the same income that subjects Social Security to a higher rate of taxation.
That's it.
Right? So when you start to see this for what it is, you actually have competing wings of the tax code that are just like kind of sitting there waiting in the shadows, salivating, waiting for you to make errors, right? And it's not isolated to just income. If you sell a house in retirement, if you come into an inheritance that's forced taxable, all of these different items can impact your Social Security, the rate of tax you pay, the rate of tax that you pay on your capital gains, what you pay for your Medicare, what your kids might pay when they inherit the money at some point, whether there's any tax shelters that they benefit from or not. When you start to see this for what it is a multi-headed beast. And there is going to be an enormous gap between people who prepare to fight that versus people who just go through the annual TurboTax exercise, which is leaving so much to chance. And that's why I said before, paying taxes to a certain extent is voluntary. If you understand what you're fighting and you get prepared and you get some expert education and advice, a lot of these things through proper planning are either avoidable, or at least you can mitigate some of the damage by taking moves with your money and properly putting it in the right place, or taking distributions at the right time so that you can keep more of your own money in your own pocket.
And this is what I think you were really getting at before, that there is a difference between tax preparing and tax planning. Your CPA, your TurboTax does tax preparation. It's for the year in the past. A financial advisor is going to be able to sit down with you and help you plan for taxes in the future, and hopefully mitigating that burden as well.
I would say that if you've been doing tax preparation, good on you. That's half the battle right there. But the more important part lies ahead of you, the tax planning. If that's not something that you've investigated on your own, Arcadia, of course, is here to help. We have all sorts of links below that you should check out. Get in touch with us, like and subscribe, and check out our other content.
If you liked this video and it helped you, watch another one, and don't forget to hit subscribe.